Well, joining us now is Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Larry, great to see you there today, and thank you so much for joining us. Now, we keep talking about these growth-sensitive assets, if you like, of course, equities, commodities, you've got cyclicals. I mean, they seem to be outperforming right now. As we were just hearing there, a lot of analysts say equities is the only place to be. Is the growth trade still the place to be, in your opinion?
Well, yeah, I think it is. I mean, I look at two things. I look at economic overheating versus financial overheating. And on the economic side, data flow is still really good. Earnings have been stellar. I mean, look at the third quarter in the Eurozone, Japan, double-digit gains. That's great. Wages aren't really causing a whole lot of pressure, if any. But on the other hand, you have to be realistic and look at financial overheating. I mean, all the economic data is good, but we have to remember that, at least in the U.S., trailing GAAP multiple is trading around 24. I mean, that's really high. High yield is at 6% and below. That's not high yield anymore. And stock ownership is back to where it was around 1999, 2000. So I still think the growth trade is the place to be, but I am cutting back as we speak.
We're all kind of looking for the next catalyst as well. Yes, if you still say there is more in it, that is good news. As earnings season obviously winds down, as you point to, the market is waiting for that next catalyst. Do you think that could be the tax bill?
Yeah, I think absolutely. And I think we're seeing that even now. I think you mentioned before the break how we're seeing bank and financial stocks taking a little bit of a hit today compared to the market. And I think people are just starting to grow skeptical, finally. And Thursday we get the Senate's text come out, and I think it might say something a little bit different than what we've heard a couple days ago. And so I do think the market's growing skeptical. It's taken a long time for that to happen. But when we talk about, state and local tax, mortgage deductions, et cetera, things that just won't pass, I do think the market's becoming a little bit nervous about it all.
Mm-hmm. We talk there about materials and energy stocks really supporting the rise that we've seen recently, but there's a lot of doubt, I suppose, as to whether that environment is sustainable, because as we know, commodities do tend to be cyclical. What is your view on the commodity space, and your view in particular on the oil price? I'm just wondering if you think it can continue moving higher from here.
Yeah, well, consider WTI is about flat for the year. It doesn't seem that way given the stunning run we've had recently, but it's really unchanged. I do believe that oil could see a sustained move 55 to 60. I don't see it getting much higher than that, just given how easy it is to get supply into the market. Brent is a whole different story, and that's why we see the differential has widened by $1 in just the last week. I do think that could continue to go higher, just given the fact of just all the different unknowns with Saudi Arabia and the news flow that happens out of there. But I don't think on the state side that above $60 a barrel by the end of the year is unrealistic. I don't think it could go much higher than that anytime soon.
Mm-hmm. Yeah, all right. And of course, corporate earnings, we continue to talk to as well. I think we're about 80% of the way through corporate earnings for those S&P 500 companies. And overall, it seems like it's been really solid. What have you made sort of coming to the back end now of reporting season? What have you made of it so far, Larry?
Yeah, what I've made of it is that the bar was set very low for the third quarter, and we've exceeded that. But we do have to also remember top line really is exceeded by quite a bit, even if the hurdle was a little bit higher. Sales have been really, really good, and that's been carrying the stock market to where it is today. That said, I do think it's going to be a little bit harder to replicate the third quarter next quarter, and that with that, I think I'd be a lot more particular with the sectors that you're investing in.
So with all of that in mind, with all of the factors here, with earnings, with commodities, you talk about their economic overheating and financial overheating. What's your asset allocation looking at right now? Has there been much of an adjustment?
Yeah, and I think everybody knows that I really went at weight the U.S. a year ago relative to emerging markets. I cut back my emerging markets overweight about a month ago and have spread everything into Japan and especially the Eurozone. I really think the Eurozone is the place to be. I think the U.S. Economic engine could continue to go, but I just do think that it's a lot farther along than anybody else. So that's what I'm, I guess, underweight is the best way to put it. Overweight the Eurozone, especially in the financials and cyclicals.
All right, fantastic. On that note, Larry, we'll leave it there. We appreciate you joining us as always. Thank you so much.
Thank you.